Look, I'm not trying to sit here and add to the whole scare media thing or anything like that, but I'm gonna be just completely honest with you guys. The world economy has never, ever shut down this fast, ever. Okay, guys? Millions of people are losing or already have lost their job. Okay, the C virus is spreading extremely fast. It's going parabolic. You see financial influencers constantly talking about the current state of the markets. It's almost impossible to get away from this news. But I never thought it would come to something as crazy as this. This is truly history, guys. The government is giving the Fed unlimited power to print as much money as they want as a stimulus package. What does this mean for Bitcoin and cryptocurrencies? And more importantly, what does this mean for the whole economy of the United States and the rest of the world, guys? I'm gonna be doing some predictions here. Keep watching. Before we get started in the video, just a quick announcement, guys. If you haven't already joined my group chat, I'm paying people to interact and talk. There's a reputation score. The more reputation you got, the more money you make, okay? 2, I have a free newsletter where I'm giving out, all these secret charts that I don't really put, in my videos for obviously time reasons. 3, I am dropping a course called Fundamental Secrets. If you purchase the one that I have now, which is called Blockchain Basics, you will get Fundamental Secrets for free. Now, Fundamental Secrets can be significantly more expensive than Blockchain Basics. So it's literally a deal that you and I are making for you giving your trust to me. You get like 90% off. Okay, and then last one, that painting in the background there, you're not gonna find it anywhere else on the internet. A lot of people have been asking me because I have created it myself. There's a website in the link below. All relevant links are gonna be in the description below. You guys think I'm playing here? This is literally the NewYorkFed.org. You can literally see right here, I'm not lying. This was the schedule for yesterday. Today's the 25th, and then you can see headlines everywhere talking about the $6 trillion that they're pumping into the economy. Okay, this might seem like a good thing short term. And, I was talking to my dad and kind of older people that have been, obviously on this earth longer than I have. And they're all like positive about it. What's positive about diluting the supply of money? I'm going to explain in more details. I'm gonna give you guys historical evidence. I'm not just going to go on charts and everything like that. I'm gonna give you historical evidence, hundreds of years of evidence why this is not that good of a solution. It's actually a very short-term, quick fix solution that, the common theme of, modern society has seemed to adopt, and how it could be really bad long-term, guys. It could be really, really bad long-term. Look, I'm just gonna quickly go over this video by 60 minutes. It's gonna break it down in more detail, and we're gonna jump into specifics on what's exactly going on. They kind of just spill all the beans in this video. They straight up just spill all the beans in this video. This type of information, whether you want it to be involved in your life or not, is very important. If you have money in your bank, if you have money in Bitcoin, if you have money in gold, if you have money in stock, if you have money anywhere, this information is very, very important. Let me jump into the video.
Millions of people are going to lose their jobs, and that's what's so scary about this.
Millions of people have already lost their jobs. Let me show you what I'm talking about. This is the unemployment chart. It's really scary. This is going to be very scary for you guys, but look, the unemployment chart, this is 2008 recession. Okay, we're looking at this big recession that everyone wants to talk about. My mom always talks about it, how she survived the recession. And I'm sure you've heard of it, time and time again. This is the unemployment. This is a prediction by Goldman Sachs. This is actually 6 days ago. They predicted. That is scary. In that short amount of time, that's just extremely mind-blowing. That is mind-blowing. So it's not that they're going to lose. They already have lost.
Are we in a recession?
If we're not right now, we will be soon.
So he's just he's obviously trying to sugarcoat it. We are already in a recession, people. The pullback in the S&P 500 has exceeded 30%, even though it just recently bumped back up. This is the fastest 30% decline in the history of all, United States. So I would say we are clearly in a recession.
My base case scenario is we will at least have a mild recession like after 9/11. The worst case would be we'd have a deep recession like the 2008 financial crisis. We just don't know right now.
Okay, so they keep saying 2008, but I'm going to show you historical evidence that it's more like the Great Depression and less like 2008, for sure. People, they're definitely sugarcoating this, but even though he's sugarcoating this as much as he possibly can, he does spill a lot of beans that it's so funny that people think it's a positive thing, but it's almost like they flip the script on you. They make such a bad thing look so good. And I'm going to show you what I'm talking about.
Will the Federal Reserve ensure that banks have all the cash they need to satisfy whatever withdrawals may be coming?
Yes, this is the fundamental reason the Federal Reserve exists. We call it lender of last resort. This is literally why central banks exist.
More on this for the rest of the video. They're very scared for you guys to pull out your cash. I've already pulled out my cash from the bank, just to let you know.
If everybody gets scared at the same time and they demand their money back, that's why the Federal Reserve is here, is to make sure that there's liquidity, that there's money to meet those demands. We will absolutely meet those demands.
What he's basically saying is they'll do everything in their power to print as much money as they can to meet the demands of the people pulling out money from the bank. And the recent case, which is basically the liquidity, there's no liquidity. Everybody wants US dollars. Nobody wants any of these, horrible investments. So the government is printing $6 trillion to try to combat that.
Is the Fed just going to print money?
That's literally what Congress has told us to do. That's the authority that they've given us to print money and provide liquidity into the financial system. And that's how we do it. We create it electronically, and then we can also print it with the Treasury Department, print it so that you can get money out of your ATM.
Are the banks sound?
They are right now. Now, we're hearing from big businesses across the country.
They are right now.
Now, we're hearing from big businesses across the country, including in Minnesota, that big businesses are drawing down their credit lines. They're borrowing money from the banks just because they're nervous. And if they're all drawing down these credit lines at the same time, it puts stress on the banking system. And that's where the Federal Reserve steps in to provide that liquidity to make sure that the banks have enough money to get out to their customers.
That's where the Reserve steps in to print as much money as they possibly can to keep their failed system from falling. Okay, so, I have kind of the same views. You would think that, obviously, the whole premise of this video, they're printing the money, it's a bad thing. But for the short term, guys, I was actually talking to somebody and he had some pretty good insight. It'll be a catastrophe. If they didn't do any type of stimulus, it will be post-apocalyptic. People are going to riot, hit the streets, do everything in their power. So I do believe in short term, you got to do what you got to do, right? Essentially. But that doesn't mean that this system isn't flawed in the first place. And I'm going to explain what I'm talking about, longer term solutions to this devastating problem, 49-year experiment that America has, basically been using Keynesian economics. I'm going to explain what I'm talking about, guys. This is historical. I have historical evidence, hundreds of years back to the Roman Empire, of why these systems do not work.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
She loves me. She loves me not. She loves me. She loves me not.
Number one, we were always too slow and too timid in responding to the crisis. The reason is we didn't know how bad it was going to get, and we didn't want to overreact. And it turned out it got really, really bad, and the right answer should have been overreacting to try to avoid the devastating recession that we ended up happening. So today, whether it's healthcare policymakers, fiscal policymakers, which means Congress, or the Federal Reserve, we should all be erring on the side of overreacting to try to avoid the worst economic outcomes.
Quick, here's $1 trillion. Of course, I'm not oblivious to what's going on. I can see how this is going to be really good for the economy in the short term. But it's kind of like, I would say, kind of like somebody is addicted to something, right?
Drugs and alcohol have ruined my life.
You try to take an alcoholic off of alcohol, they start getting sick. They start getting really sick, and the only way to kind of solve that in the short term is to give them more alcohol, even if it's a little bit, right? You give them a little bit more alcohol, they feel better. But what that does is it prolongs the problem. So when I think about a problem, I think the best way to solve it, and maybe you have the same opinions, is to go to the root cause of the problem and purge it, okay? Go to the root cause of the current financial system. We're going to be diving into some history here, and I'm going to show you exactly what I mean by this, why this quantitative easing, why this money printing, this $6 trillion that they're putting into the market is not necessarily a good thing, okay? So the first one I think of is rhinestones, okay? If you guys don't know what rhinestones are, they're basically a form of money in the island of Yap. This is, hundreds of years ago, right? And basically just large donuts shaped rocks right here, as you can see. Now, the reason why these were so valuable to the people is because it wasn't native to the island. They would actually have to go to another island to harvest it. And it was just really expensive to do. It kind of reminds me a little bit like proof of work in Bitcoin, right? And the thing is that they actually worked a lot like Bitcoin because these stones wouldn't be moved. They'd be literally placed, and if you were to sell something and you wanted to buy something with the rye stone or something like that, you just do some type of commerce, then you would essentially assign the rye stone to another, citizen of the society, right? Essentially like Bitcoin, public ledger. The Bitcoins are technically on the blockchain. It doesn't move anywhere. When you send a transaction, they just assign it to another person, right? That's essentially what this was. Now, this all went south, okay, when they started basically devaluing their currency. Now, it wasn't specifically the native people of Yap, but it was this guy. His name is David Dean O'Keefe, okay? So he basically shipwrecked on the island. I'm trying to make this as simple as possible. He shipwrecked on the island, and while he was there, while the people kind of helped him out, he saw a really big opportunity with coconuts. So he saw that this island had a ridiculous amount of coconuts, and he wanted to sell it to coconut oil makers, right? So in doing so, he tried to get the people of the island to basically join him in gathering this coconut and basically just taking part in the exportation of these coconuts. But the problem is that the people didn't value, David's money, right? They didn't value David's money. It was just a piece of paper. They didn't care about it. They cared about rye stones. Okay, so he didn't want to take a no for an answer being an entrepreneur. So he goes, right? He leaves the island and he goes and finds a whole bunch of dynamite and a whole bunch of modern technology to harvest this rye stone. So he goes, blows up, this huge rock, starts harvesting a ridiculous amount of rye stone, takes it back to the island of Yap, and he starts trying to pay them in their own currency. But the problem is that specifically the elders of Yap, they were basically saying that, the rye stone wasn't gathered in the ancient ways, their traditional ways, so it wasn't valuable. Essentially, there was like funny money, funny Bitcoin. Regardless of that, people still started accepting the payments like under the table. They were getting this rye stone. They were coming out of nowhere, and basically this devalued the rye stone because it was really easy to get. Okay, essentially it was easy money, printing $6 trillion, same thing. Okay, we can see this also in agri beads. Okay, agri beads are basically in Africa, same thing. They use these glass beads as a form of payment. Okay, it was really hard for them to make these glass beads. Then Europeans came in with their glass making technology. Actually, a lot of people, you can look it up for yourself, started calling agri beads slave beads because they came in, they devalued their money by putting more into the supply, and people were essentially used as slaves. And we can see similar situations all across history, back to the Roman Empire.
I started doing drugs when I was little, just like you, fella. Me and my friends would go home and smoke marijuana after school.
We can see it currently, right now, hyperinflation, a whole bunch of countries hyperinflating their money, and it's being rendered useless. In Venezuela, we see it in Venezuela. Now we see, the United States are doing it. Now, this is gonna blow your mind a little bit. When I saw this video, I really didn't believe it. Usually when I see something like this, I do the exact opposite. And I already did it. I did it like weeks ago, but let's look at this right here. So this is from the FDIC Gov, and they're putting these weird videos out, guys. They're putting these really weird videos.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
Usually with videos like this, it's kind of funny to me. I do the exact opposite of what they say because it's really weird that they're putting this video out in the first place. The fact that they have to convince people to leave their money in the banks is really weird. They're panicking. They're freaking out, people. If everybody goes and withdraws their money from the bank, this bank run is going to cause an economic collapse, people. If we look right here, they say specifically that they haven't lost a dollar since 1933, which is kind of laughable because, for people that don't know anything, that makes a lot of sense. Maybe they haven't lost a physical dollar since 1933. But we know that's all BS. Look, as you can look at this chart here at the bottom right, this is inflation, people. This is the purchasing power of the dollar. This is what actually makes sense in a dollar. So as you can see from 1933, the power of $100, okay? So literally right now with $100, if you were to purchase like an item or something with $100, you will get an equivalent of $5 in 1933. So you spend $5 in 1933, the same amount you'll get now with 100. So it's not the fact that, you know, they're taking physical dollars, the fact that the purchasing power, the whole reason the dollars work in the first place are being slowly inflated. Inflation, people, they're taking away the most important part about our money slowly over time under the radar without you actually knowing. It's because people don't take the time to learn economics. They don't take the time to learn simple supply and demand, right? People, there's not hard things here. It's just simple supply and demand. And to couple with that, look, they're actually, you know, tomorrow, March 26th, we are used to fractional reserve. So essentially, if you put in $100 into your bank account, they only are required to keep 10%, which is $10 in your bank account. They're dropping that to zero. So if you put $100 into your bank account, essentially, they don't have to keep any of that physical cash. So they're trying to convince you to not pull your money while simultaneously taking away the physical deposit for the cash and the banking. These are all red flags. What is going on? They're freaking out right now. They don't know what to do. $6 trillion into our market is the biggest stimulus package we have ever seen ever in the history of the United States. It's just, you guys are living in exciting times, I will admit.
Kids, drugs is all around you.
Now, we looked into the history, and by the way, guys, I'm going to be making my videos a lot shorter. A lot of people have been talking about, you know, they're asking me, hey, Alex, can you make your videos a little bit shorter? So I decided to make this a little bit more concise. So what does this mean for United States, right? Like, what's going on? Like, what is this? How is this going to have effect on our lives? Well, one, I pulled my money from my bank account. I have physical cash. And, you know, a lot of people are like, oh, they literally say in the video, oh, don't put it on your mattress. But why not? Well, who cares? You could essentially deposit it back. If I was wrong about that, you could easily deposit it back. But, you know, what's happening with the current state of the US dollar, guys, this hyperinflation here? Well, what it goes through is basically this weird loophole. And we've seen this time and time again. So essentially what happens is these big businesses, they don't want to take out any more credit, right? People stop making investments. They're scared, right? And they want to go into US dollar. They want to hold the dollar, okay? And when they want to hold the dollar, there's a liquidity problem in stocks and investments. All traditional assets, there's liquidity. They literally coined the term. There's liquidity problems in the United States right now. Right now, it's hard to find liquid cash, right? So what happens is the Fed comes in and they solve that liquidity problem, which in turn scares more people, which in turn is having them, they have to solve more, they have unlimited power. So they solve it again, and it goes through this cycle of them hyperinflating the dollar. They're printing more and more to solve the liquidity problem. People are getting scared, solve the liquidity problem. People are getting scared, and it just keeps going until they're printing just way too much. Actually, 6 trillion, in my opinion, is just way too much in the first place. And this is kind of ringing the same bell of the 2008 crash, right? Now, it's not exactly the same, but keep in mind, guys, Bitcoin was created after the 2008 crash, right? They printed $3 trillion here. So we're going to do some price predictions so you guys can see like some cool stuff here. But this is a really cool article. During the crisis of 2008, the Federal Reserve of the United States printed over $2 trillion in order to prevent global, credit bubble. Same thing. This is like basically a big credit bubble, right? Their capacity rocketed to $3 trillion. So essentially they're taking on the debt. Bitcoin was introduced the next year, following which the cryptocurrency market we know today came into beginning. So Bitcoin was literally created for this reason, this exact reason we're happening right now. Bitcoin was created, okay? It's going to rise because of it, okay? On the day of the collapse, the Fed announced that it would be utilizing the repo market. Basically, they're explaining here that the first collapse that we saw recently, they started printing the heck out of the money. They did everything in their power to stimulate the market. A repo or repurchase agreement is a form of short-term borrowing, mainly in government securities, where organizations who already own a lot of securities are allowed to borrow money at a cheap rate. Essentially, what the government is doing is they're bailing out the banks. People that have been making horrible decisions, investment decisions, get free money. And it makes no sense to me because these banks are just way too big. Essentially, if they go down, then a lot of people's money go down. So they do everything in their power to keep them going, right? Whenever a financial system goes south, the central bank prints money. That is their problem for anything. If there's anything wrong with the economy, they just print money. It's just horrible thinking. It's Keynesian thinking. However, as people move towards the US dollar, the printing of the enormous amount of money depreciates and people start moving towards crypto. Once they start realizing, wow, like the federal government, this modern economics is not working. It's never worked. They're just pushing the problem into the future. That's all they're doing, right? Every time they print, pushing the problem into the future. There's going to be an economic collapse. I don't know if it's going to be now. I don't know if it's going to be 5 years from now, but it's going to happen. And the more that they push it into the future, the worse it's going to get. It's going to get bad. And I'm telling, this is, simple supply and demand. I'm not throwing anything crazy here. Everybody kind of knows this. So in 2008, when they did, the $2 trillion, 145 billion in capital found its way to Bitcoin and Ethereum. Okay, that's specifically only Bitcoin and Ethereum. So let's do a little quick price prediction. Now, keep in mind, guys, like this was when, Bitcoin first started, right? And this is obviously in a 5-year period, right? After first printing cycle in 2008, 2013, it was claimed about 145 billion. Okay, so currently we have much bigger exposure as cryptocurrency. Bitcoin has ridiculous exposure compared to before. There's a lot more people in this economy. The market has in 2017, essentially a lot of people learned about Bitcoin in 2017. So it's much bigger now. They're much more likely to go back. But let's just be really conservative here. So if we take for example, 145 billion. Okay, and this isn't a 5-year period. We'll just cut it down to like 2 years because I think that's, especially with the block halvening, I think a lot more capital is going to dump into Bitcoin and cryptocurrency. Guys, remember, we've seen a total market capitalization of $1 trillion before. So this prediction here that I'm making is going to be very conservative. So 145 billion here. Let's add that up with the current market cap of cryptocurrency as a whole. So that's another 185. Wait, we have to first multiply this by 3. So essentially, they just printed 6 trillion, right? So back in the day, they only printed 2 trillion. So if we multiply this by 3, we have 435. Okay, why am I getting that number? This is very rough calculations, but the reason why I'm getting that number is because, again, they captured 145 billion with a 2 trillion printout. I'm essentially multiplying it by 3. This is the biggest stimulus package ever. And, I got to kind of match that. So let's say we capture another 435 billion. The reason I'm doing this is because a lot of people really don't believe in Bitcoin. They really think that this $6,000, is really expensive. And that is not the case. Okay. So that's the total market cap. Let's add it up with the 185 billion right here. And I'm just going to show you how easy it is to see how cheap Bitcoin could potentially be. And this is a very bad prediction. I have better prediction videos. You can go check that out for yourself. But 620 billion. Now Bitcoin's dominance is at 66%. So multiply that by 0.66. So Bitcoin's going to capture 409 billion divided by the total circulating supply. Very rough calculations. It's at 18 million. Let's just do like 19 million just to make it conservative. 19 million. Okay. So that's a $21,000 Bitcoin. Can we see a $21,000 Bitcoin again? Well, we've already seen a $20,000 Bitcoin. We've already seen, look, as you can see here, 314, the market cap of Bitcoin right here, $314 billion or $15 billion. Okay. We've already seen it before. To say something like this can't happen again in the next 2 years is absolutely ridiculous. It's going to happen. The market cap of cryptocurrency is way too small. And as people start realizing what's going on with this, devaluation of the money, okay, when they start doing a little bit of research, or start reading some books, start seeing that Bitcoin's not the place for drug dealers. Like less than 3% of all transactions go through drug dealers. Actually, if you were to do transactions through Bitcoin, it's a public ledger. It's a public ledger. There's nothing safe about doing illegal transactions on Bitcoin. If anything, it's much easier to hide your footsteps with US dollars than it is Bitcoin. If you're a real criminal, it is stupid to try to use your criminal activities with Bitcoin. Doesn't make sense. But that's it for this video, guys. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind.